If you've ever thought about investing, you've probably heard of active and passive investing. But what do these terms actually mean, and which one is right for you? Well, today we're breaking it all down. The pros, the cons, and why most investors lean towards passive investing. Let's dive in. First up, let's talk about active investing. This is when investors, whether individuals or professional fund managers, try to beat the market by picking stocks, timing the market, and making frequent trades. Think of it like being a chef in a kitchen, carefully selecting each ingredient and constantly adjusting the recipe. Pros of active investing: potential for higher returns if done successfully, flexibility to react to market conditions, opportunities to hedge against downturns. Cons of active investing: higher fees and transaction costs, time-consuming and requires in-depth research, higher risk, and most investors don't actually outperform the market long-term. On the other hand, passive investing is a set-it-and-forget-it strategy. Instead of trying to beat the market, passive investors aim to match the market's performance, typically by investing in index funds or ETFs that track major indices like the S&P 500. Imagine it like cooking with a pre-made meal kit. It's simple, consistent, and gets the job done. Pros of passive investing: lower fees due to fewer transactions, less stress, no need to constantly monitor the market. Historically, passive investing has outperformed most active strategies over the long term. Cons of passive investing: limited ability to outperform the market, less flexibility. Investors ride both the highs and lows of the market. So why do most investors choose passive investing? The biggest reason is consistency. Studies show that over 90% of active fund managers fail to beat the market over a 15-year period. Plus, passive investing is easy, cost-effective, and perfect for long-term wealth building. That's why legendary investor Warren Buffett himself recommends index funds for most people. So, which approach is right for you? If you love research, risk, and strategy, active investing might be your thing. But if you want a stress-free way to grow your wealth over time, passive investing is a solid choice. If you found this video helpful, make sure to like and subscribe for more investing tips.